What's going on, guys? It's Tender from OQP, and what I'm going to be walking through with you guys today is another smart money concept. However, this time around, I'm showing you guys on the 1 minute time frame. So essentially, what I'm doing is taking you guys into my mind and the process that I go through before I take trades, right? So I'm going to show you everything, and I'm going to show you how this trade that we actually took today played out, and I'm going to explain the whole process. So get yourself ready, get some popcorn, and let's get it. So one of the first few things when I open up a fresh chart like this is I see where the trend is. Where are we going, right? And clearly illustrated by this trend line that I've just put on the chart right now is we're clearly in a downtrend, right? I think anyone could see this. You, your mom, your dog, everyone could see that we're going in a downtrend, right? So the first thing we identify is the trend. And as we go through these steps, what I'm going to do is, in fact, I'm going to write them down. So trend / market direction, right? Direction. Perfect. So the first thing we want to be looking at as soon as we jump in the market is where we're going. And I've illustrated that by number one, trend line. The second thing we want to be on the lookout for specifically is the trading range. Which trading range are we trading in right now? And I'll show you. So the trading range for me, right, what I tend to put on the charts is from, let me show you guys, this low to pull back to new low. So low, high, low, right? So the trading range is actually from the high point to the new low. And I'll make these red so they're differentiated. So these two red horizontal lines right here and here is our trading range. So what I'm looking for in a trading range is for price to return to a much better price so we can continue selling it. But how can you be certain of where price is going to specifically come to before continuing going down? Well, I'm going to show you. But before we do that, we've got to add in our second step. And our second step is the trading range. Fantastic. Just like that, right? Before I do proceed, I want to say that in different circumstances, what we tend to look for is liquidity, right? So what liquidity is, all it is, but this example isn't the cleanest in regards to showing you liquidity. However, I'm still showing you the power of trading in such a manner like I'm showing you right now. So usually this is another step I would include. So let's just say that this step is here in this situation, right? Even though it's not, right? So what we like to identify before we notice manipulation, which is this last bullish candle before the push down of breaking structure, right? What usually would be at number 3 is liquidity. So what tends to occur with liquidity is, let's say there's an equal level right here. There's an equal level right here where price is not only, let me change this color, where price would be hitting the same spot a few times. So let's say price hit this spot as it's done here, and then hit that same spot again, and then perhaps a third time, right? So what we would usually do is mark it up as we've done so with this white horizontal line, and afterwards we just put a pound sign above it. The thing is with liquidity and these equal levels is, for retail traders, what they have been taught is that when price hits a certain point a few times, as a hypothetical in this situation for a different setup, is that they sell from these points. And the reason for them selling is that they are taught that these are double tops, or if this was the opposite, double bottom, or triple if it hits more than twice, and quadruple. So they'll be selling from this point. But the thing is with selling from here is that they don't realize that the banks, which is what we'll be identifying as number 4. So you know what? I'll put in at number 3 because I'll show you an example where liquidity does come into play. This is just a different example, still showing you the power in these smart money concepts. Sometimes liquidity isn't always there visible, but if you can see what's happening because of your experience in the markets, then you can capitalize without seeing liquidity. However, in this situation, I'm going to put liquidity for you guys, okay? Liquidity slash money. Yes, liquidity slash money. Right. So once we identify our liquidity, as we would have done in this situation, a touch here, let's say another touch right here, this is where our money is sitting, right? And as I've briefly just gone over, what retail traders assume is that they're selling from this point, sorry. But the banks, they know that retail traders like to sell from these equal levels. So what they'll do is they'll push price up, right? They'll push price up, taking out stop losses that would have been above here. So if I just quickly show you perhaps a retail trader, what he would have been doing. I suppose this is super tight, but some people put their stop losses like this and get caught out, okay? So maybe they would have done this. They'll be like, oh, one touch here, another touch, I'm jumping in. I'm getting in this trade. So they jump in, right? Sure, they give them a little bit, but then they just come and run them out. This is the banks running them out. So what you want to be on the lookout for is this last green candle. Bear in mind, we're on the 1 minute time frame. This last green candle, which is a bullish candle, right? And following that, what you really want to be looking for is the fact that we've broke structure, okay? We've broke structure. This is super important because if we don't break structure, then the trade is invalidated, okay? So BOS stands for break of structure. Super simple, right? Awesome. So I'm going to add to number 4 is the manipulation. Or last, it's pretty much the same thing, but I'm just putting or bullish, or last bullish slash bearish if we're buying candle, right? So just to recap, if we just go over this again. So first thing we want to be on the lookout for, where are we going? We identified we're going in a downtrend, right? Nice. That's the first thing out of the way. Second thing we want to be on the lookout for is our trading range. We have to have an assumption of where price is going to return to before continuing selling, because we're in a downtrend. We're not looking for buys. We're just strictly looking for sells, right? Nice. Okay. So the third thing we identify after that is the liquidity. However, in this situation, this is more so an advanced tutorial because the liquidity isn't clear for you guys to see. However, I'll show you. But in this situation, as a hypothetical, we would identify the liquidity slash money. So we'd put our little line where equal levels are and a little pound sign above to indicate our liquidity. After we do that, at step number 4, we see where the manipulation was. So the manipulation really and truly is the banks driving price up, taking out retail traders as stop losses who were selling for double bottoms, right? This is what we'd have to identify next. So in this situation, it's a beautiful bullish candle that then has price come all the way down, breaking structure. Guys, structure being broken is key, is very key. If price was just to come and then just dwindle in here, not break structure and then come here, no, don't take that trade, okay? Okay, so we identify the manipulation. What we then have to do next after doing so is, yes, we have our, apologies, we have our last bullish candle here, noticing breaking structure. Next thing we do is wait for the mitigation, right? So number 5, wait for mitigation. Mitigation. So the thing is, the banks, when they sell price after manipulating, as they've done in this situation, they have to come back up and close their I believe it's their sell positions or their buy positions. It's not something you really need to know all too much. You just have to have an idea of what they're doing. And what they're doing is that they're coming back, right? That's all you pretty much need to know. They're going to come back and continue going down. That's obviously not to say this will happen all the time. There's no such thing as a strategy that's 100%. But the percentage returns that we have are pretty good. So we'll keep doing what we're doing, right? So you will then, right, identify that last bullish candle that leads into price breaking structure, might I add. Oh goodness, I added this in the incorrect spot. Hold on a second, guys. Okay. It's supposed to be added onto here. Okay. 5, wait for mitigation, right? And what I usually do is I'll put the time frame in which I'm looking at this in, 1 minute, and then what I'll put after that is entry, right? So everything is clear and cut in front of my face. I know what I'm doing, right? So I'll mark that as my entry position because it is my last bullish candle before price went down and broke structure. If it does not break structure, don't get in, right? Otherwise, you're setting yourself up to fail pretty much, okay? So you got to make sure you're strict with what you're doing and following these instructions if you want to have a better chance of succeeding with your trading, okay? So now we've got all this set up, right? All of this is nicely set up. And like I did mention earlier, this was a trade that we had taken earlier today. So I'm essentially recapping what we've already gone over. So this trade has already gone through in our direction. I'm just showing you the process in which, okay? So everything is set up nicely. We've gone through everything, our market direction, our trading range, the liquidity, the manipulation, which swiped the liquidity. And now we're doing is waiting for mitigation. So guys, I did in fact forget to put in an important step. So let me add that in. Break of structure. I've been emphasizing it and I didn't even have it written down yet. It is probably one of the most important, but at least you guys know now, right? Break of structure, super duper important, right? Break of structure. So to go over again, market, trend direction, trading range, liquidity, manipulation, which is swiping that liquidity. And what we want is a break of structure continuing to the downside. And then after that is that we're just waiting for price to come back into our zone and continue going down. But before I play this so you can proceed, I want to show you guys quickly where my take profit was, right? What you notice with this specific take profit area, which is price action in the past, is that this is essentially another smart money play, right? All it is that this is bearish this time instead of bullish, sorry, instead of the bearish example I was just showing you guys. So again, let me bring, you know what? Because it's a target level, I don't need to get too specific, but you can see the same concept. There's liquidity right here, pound sign right there, little manipulation. Bear in mind, this happens in the 1 minute. So this is a little manipulation, which then pushes price up, right? And if I'll put here, this is essentially our BOS. And for you guys who've been paying attention, you would know that this is our break of structure, right? So let me just add that in. So you notice the break of structure. Fantastic. This is confirmation that price will return here at some point. This wasn't a return to price because as you can clearly see, it didn't touch. They gotta touch, guys. It has to touch. So what I did as I was analyzing this trade is that I had that there. So if we then go back here again to the trade we were just looking at, this was my target zone. So this was a beautiful 8 to 7 risk to reward ratio. So if you had, let's say you wagered potentially losing £10, you would have gained £80 solely just off this trade. And this trade didn't take no longer than an hour to happen. So £80 in 1 hour, it's not bad if that was the case. For some other people, £100, they would have got 800, 1,000, 8,000, the list goes on. You understand? Right. So if we play this so we can have a look to see what happened, and I'll explain as this happens. Right. So what's key as this is occurring in front of us right now is you could have got FOMO around here, right? Price got close to our range and you might have been tempted to jump in the trade, right? And this is what kills a lot of people in trading because of their impatience, their greed, looking at price, doing all of this madness. But what we are doing at OQP is that we're trusting our process and we are waiting. We are patient. Even if price goes all the way down here, we are still patient, guys. Trust yourself, trust your trading, trust what you've learned with us. Don't get greedy. Don't jump into the markets too early. Wait. Okay? Wait. Right. And that's exactly what we did. So hold on a second. Let me drag this along because price is going to come back up. Right. So while this is all happening, we are just patiently waiting because we trust. We've seen this happen so many times that we don't panic. This is just noise to us. This is all just noise. Okay, so here we go. What was super key with this trade, and what I want you guys to notice, right, is look at this. Look at the drawdown, guys. This hardly went into any drawdown at all. Hold on a second. Let me drag this along and continue playing. Right. This hardly went into any stop loss. It pretty much went straight into profit. And you see as this continues, that's exactly what happened. Let me speed it up. Let me speed this up a little bit. Right. Bada bing, bada boom. So this was the trade we took today. And look at this, guys. Wow. Beautiful. Beautiful. Right. This is probably as good as examples can get in relation to 1 minute gold trading and smart money concepts. And we have all our steps right here. So the fact that we went through all these steps, right, and it led us to the result that we wanted shows that the steps work, right? It's really that simple. Trading does not need to be complicated. And with this example that I've just shown you, that's exactly it. This wasn't at all complicated. We followed a simple 6-step process and it led to us getting money in our bank accounts. All right. So what I really hope you guys got from this is how simple, not only that it is, but how extremely effective it is. Because for myself, if I'm to get a little personal here, is these smart money concepts pretty much changed the game for me, right? Before discovering the smart money concepts and having guidance and learning, I didn't have that light bulb moment. However, after I learned this and the way I've explained it to you guys, is when the light bulb moment went off for me. This is when I really started to understand Forex and it really clicked for me. And ever since then, things have been great. So all in all is my goal is to explain this to you guys in as simple format as possible. And I think this is pretty simple and pretty straightforward and shows you guys the power, right? So I really hope that you guys gained a ton of value from this video. And if you guys ever need any assistance, any direction, any help, or anything like that, come to the Instagram page, shoot us a message. I'll be there to reply to you guys. I'm always around, so don't be shy. Let me know what's going on, and I'll be there to answer any of your questions. But hey, I hope you guys enjoyed this smart money concept video, and I can't wait for you guys to tell me how much it has changed your trading game, right? Because I know it's gonna. But anyway, it's been Tatenda from OQP. I will catch you guys in the next video. Have a lovely day wherever you are, and I'll catch you guys next time. Peace out.